Hello, hello, everybody. As you get settled in, just imagine yourself, you're walking into the kind of warm wood paneling of Croon Hall at the Yale School of the Environment, or the kind of cool glass at Evans Hall at the Yale School of Management, or potentially like a Hogwarts-like, auditorium at one of the residential colleges at Yale. You're settling in, you see a few people next to you. You say hello. So you can use the chat function to tell us that person next to you where you're from and where you're coming from today. Please introduce yourself. Say hi to us here. We're thrilled to have you. As people get rolling in, we're going to get started in just a second. My name is Stuart DeQ. I'm the executive director of the Yale Center for Business and the Environment, and really the grateful host of the conversations, these authors' talks that we've gotten to have over the course of a number of years. And these are really based on a premise of, in a world where there's vast amounts of information, huge numbers of things that are coming at us, and a lot of complexity, the people who've taken a thoughtful, considerate, deep approach to the synthesis and integration and understanding of this are ever more important. And we need to be able to have these guides and filters to challenge us, to provoke us in different ways, to challenge our thoughts and assumptions, and to really give us some of the trends and synthesize things in a place where sometimes it can feel overwhelming. And we've had a remarkable guide for this entire series, someone who has done that himself in his own career as an author, and then a leader inside of Patagonia, Vincent Stanley, who's the director of philosophy of Patagonia and a resident fellow at the Yale Center for Business and the Environment. And a decade ago, he was our first author who came here in this kind of process, and really was just responsible for kind of pushing us to think more deeply about the approach that we needed to take in integrated programming at Yale on how do we think about the purpose and value of business. And that then led to a lovely decade-long relationship, which we are still benefiting from here. And we're thrilled today to have Marjorie Kelly, who's going to speak on her book, The Wealth Supremacy. And Vincent will do a more thorough introduction. But, we really are, seeking advice, ideas, and opportunities on where we can create more freedom and opportunity for all types of things to thrive and flourish. And where do you have different approaches and ideas on where that can come from, and what are the things and obstacles that are in their way? And this book is a really interesting exploration of different paths and values and approaches that we can take to that. There's going to be a link dropped in the chat from my colleague Heather Fitzgerald from the Yale Center for Business Environment, where you can find the book on Bookshop. We also have a link, I believe, where we'll be giving a few copies away. So if folks would like to sign up for that as well, we'd love for people to take that opportunity to really dig in and read it. During the conversation, where questions pop up and you were thinking about something and there's a burning desire to ask it, put that into the Q&A function, and then right at the end, not right at the end, but about with the last 20 minutes, Vincent is going to be pulling from those questions to continue the conversation with Marjorie. Really thank everybody for joining us today. It's a real treat to host this. Vincent, Marjorie, the floor is yours.
Thank you, Stuart. And thanks everyone for being here. Thank you, Marjorie, for being here, and also for writing Wealth Supremacy, which is a rather remarkable book. And we were talking about this. I think it's rare to have a book that is both diagnostic and prescriptive in equal measure, and where the prescriptions are in just as important or just as authentic and legitimate as the actual diagnosis of the problem. Marjorie I'm going to do the canned bio here. Marjorie is a distinguished fellow at the Democracy Collaborative, a national R&D lab for a democratic economy. She's named by Fast Company as one of 15 people at the forefront of reinventing our economic system. And her classic book, The Divine Right of Capital, is credited by J. Cohn Gilbert, B-Lab co-founder, as having inspired the B-Lab movement, or the B Corp movement. Her subsequent books, Owning Our Future and the Making of a Democratic Economy, won awards and acclaim. Formerly, Marjorie was a fellow at the Tallis Institute, where she co-founded Corporation 2020 after co-founding and editing Business Ethics magazine. And as someone who's been involved with Patagonia for its history and has watched the developments of the past 20 years, I know Marjorie and the people at Tallis and the people at Business Ethics were real pioneers in this space, have been thinking for a long time about both what the cascading problems are with the current economic system and the possibilities of change. So I think, welcome. And I wanted to ask you if you could just talk a little bit about your own evolution from Business Ethics magazine, before the publication of Divine Right of Capital and since, which has led you to the most recent book.
Yeah, thanks, Vincent, for that great introduction. It's a treat to be here today. I come from a business family. My grandfather founded Anderson Tool and Die in Chicago. My father had a small business, and I started Business Ethics magazine in 1987. It was a for-profit company. And I did it because I thought business is the most powerful force in the world. And if you want to make the world a better place, business is the place to do it. And I saw what I thought was an emerging ethos of responsibility. And so I founded that magazine to talk about positive change. I thought good business people, good investors could change the world. And over the 20 years that I published that magazine, I became alarmed to see the companies that I had celebrated and given awards to become more ruthless, more rapacious, doing massive layoffs that used to be frowned upon unless your company was at death's door. Suddenly, Jack Welch was laying off tens of thousands just to boost the profits even more. Companies like Boeing that had been in Seattle for 100 years suddenly began demanding tax breaks in order to just stay. And of course they left, and now they're seeing all kinds of problems because they abandoned those workers who knew what they were doing. So I saw this, and of course, climate emissions were climbing, species were dying. So I saw companies add CSR departments. They added ethics officers. Social investing was soaring in terms of dollars being used, and yet things were getting worse and worse and worse, and not better. And I published Divine Right of Capital. This was about 20 years ago, to talk about what I saw was the problem, which was this idea of maximizing gains to shareholders. And I likened it to the regime of the monarchy and the aristocracy, where kings had a divine right to rule, and we're in a system where we believe shareholders or wealth holders have a divine right to maximum, infinite, limitless gains. And it's an absurdity, and it's a danger. And that book is 20 years old. It's still being used in MBA classes. And I moved on from business ethics. I sold that magazine. I moved to Tallis Institute, and now I'm at the Democracy Collaborative. And I've been working with so many visionaries as a consultant, as a journalist, just tracking the remarkable work that's underway to reinvent the economy to serve the public good, and not just to serve a wealthy elite. And my last book was about that, the making of a democratic economy. And Vincent, I've become more alarmed and more discouraged because things are dramatically worse, even though I see solutions well developed all around us. So I wrote this book. I'm closer to the end of my career than the beginning, and I wrote this book as a wake-up call, as an alarm. It's an alarm bell that we need to get serious about system change, and we need to recognize the core problem. which I call wealth supremacy, this idea that wealthy people matter more than everybody else. And until we recognize that core problem, I don't think change is gonna take hold.
Right. Can you talk a little bit about the definition that you put forward in the book about wealth supremacy?
Yeah, I'm a bit of a wordsmith. I'm a professional writer before everything else. And in one of my earlier books, I coined the phrase the extractive economy, financial extraction. And that phrase has caught on to some extent. In this book, I coined the phrase wealth supremacy, and it's a deliberate echo of white supremacy, because, what I'm pointing to is a system where some people matter and some people don't, right?
Mhm.
It's a system of bias, and it's deep in our hearts. It's often unconscious. It's simply the lens through which we see the world. I mean, we used to see the world through male supremacy. That history was all
Mhm.
about the workings of great men, and and we've seen that sexism is a problem. We've seen that racism is a problem. They're not gone, but they're no longer legitimate. But we still have what I call capital bias or wealth supremacy. This idea that wealthy people matter more than everyone else. That is still legitimate. It's not only viewed as legitimate, it's mandatory in the way the system runs. And I coin a second term, which I call capital bias. Because, wealth supremacy, we see it in politics. Corporations and the wealthy can really capture politics. You see it in culture, when, the wealthy are like pop stars. But how it's operationalized, how they keep their wealth, how that wealth grows, that's in corporations and capital markets, and that's where capital bias is at work. It's the operational form of wealth supremacy. And it says, um, one myth I talk about is the notion that no amount of wealth is ever enough. That's
Yeah.
the core premise of the system. You can have $10 billion like Bill Gates did at one point. He invested it. A couple decades later, he had 130 billion. Those are ludicrous numbers, but the whole system is built on the premise that no amount of wealth is ever enough. Also, there's the premise that workers are not members of the corporation. You can
Mhm.
work at a company for 40 years, make its products, tend to its customers. You're not a member, you don't have a vote. And a hedge fund can hold shares for 15 minutes and they have a vote and they have power. So these are some of the ways that capital bias is threaded through the system. It's rigged.
Yeah. Yeah.
People have a sense that it's rigged, and I unpack how it technically is.
All right. There was an interesting point you made, and just to preface that, I would say that all of us who have pension funds or 401k accounts are capitalists, in the sense that my money is with Vanguard. They have a fund. They have funds that they're managing. I put it in places where I think it will do the least harm. But as I'm expecting a return on that to support me for the rest of my days, and I don't really know a lot about what's happening with that money. I don't know what's happening with the workers. I don't know what's happening with the environmental conditions in the places where the company operates. And you mentioned in the book something which I think really starkly explains or puts forward this idea of extractive capital, which is that the economy is growing at the rate of 2%, 2 to 3% when it's chugging along, but investors expect a return kind of a minimum of 5 to 7%. And so that the demands that places on the economy tends to squeeze out capital available for more productive exercises, for making things or for providing services rather than providing a return to the shareholders. I was wondering if you could talk about just your discovery of that and how you think that affects the larger economy.
Sure, right. Yeah, so we have there's what I call a dream world of wealth. There's this fiction that wealth just Financial gains, they just fall from the sky. They're pristine, they're unblemished, they're just numbers. They go up. Hey, that's great. You know, you wish they would go up more. And and we don't look at the underside of wealth. We don't talk about it. Where does it come from? Where does that wealth come from? And as you said, you know, if GDP is growing at 2 or 3% and capital, financial assets are growing at 5 to 7%, where does that wealth come from? Well, a lot of it comes from extraction. And at the Democracy Collaborative, we hired 3 international economists to look at financial extraction. Economists call it financialization. That there's too much financial wealth in the system, and that kind of blows the mind of capitalism, right? How can there? That's the central premise. There can't be no amount of wealth is ever enough. But there is too much wealth, and even economists at the International Monetary Fund have been studying this, and so these economists that we hired, they documented this in a very granular way. They demonstrated, they showed it. And what they said is that finance has become the locus where inequality is created. You know, so it's not just that there's unequal wealth. We talk a lot about that. Oh, these plutocrats have so much money, you know, but actually that plutocratic money creates the precarity and the debt and the low wages of others. It creates it. And this is something that it's a little bit painful to look at. You know, I have some assets. You know, those of us who do, you know, we want our assets to keep us secure, and we all deserve that. So the real problem is excess wealth. You know, it's recently came out that something like 10 men hold something like 40% of the wealth in the world. You know, so if you didn't have those 10 people, you know, with this crushing weight on the rest of us, it could be a very different economy.
Yeah. There's Yvon Chouinard had a bumper sticker on his car for a long time that said every billionaire is a policy failure. So
it's great. That's a great line.
And I just saw a headline for an article somewhere that someone creating a movement that no one really needs more than $10 million. I mean, if you want to be rich, that's about right. You can be rich with $10 million, but there's really to go to 130 billion is a very odd distortion. So
it's odd. You know, I'm actually in dialogue with some people. There's a wonderful group called Patriotic Millionaires, and these are persons of wealth, and they're out there saying, tax us more. You need to tax us more. It's a brilliant group. And one of the members approached me after I spoke there, and he said, you know, he has this idea of capping wealth. Let's put this out in the world, this idea that you know, beyond a certain level, there really shouldn't be this excess wealth. And he proposed 30 million. And I said, well, I wouldn't mind 100 million, frankly. I don't mean me, but I mean, I don't mind people having 100 million. And I think, and we're talking about maybe doing some research to show the difference. I don't think people understand the difference between, say, 100 million and 100 billion. I mean, these numbers are unfathomable, but there's a huge difference. But yeah, this idea, you know, can there be enough wealth? Yeah, it's an interesting question.
Yeah. And one of the things I'd like to before I'd like, you know, a lot of the book, about half of the book is really focused on alternatives and to the current economy. And there, by alternatives to the current economy, I don't mean a structural change to a degree that people can't even imagine, but simply I mean, Oliver Wendell Holmes once said that if you wanted to persuade him to adopt things in society out of thin air, he wasn't interested. But if you wanted to tell him you'd like to see more of a few good things, he could buy that. And I think what we've seen, in addition to the crisis that we have, the worsening environmental and social crisis, the worsening face of business. We've also seen the development of alternatives in the last 10 years or 20 years, or readoption of some things that have been around since Henry George's time. And I'm wondering if you could speak a little to those that you illustrate in the book. But first, I just want to touch a little bit on the difference between productive and speculative investment, because I think that that's so critical to the development of to the revitalization of the economy we have.
Yeah, thank you for that. That's a great point to talk about, because our language misleads us, right? We speak of investing, and we think that, for example, when I invest in IBM, I think of my money is going to IBM and it's supporting them to do R&D or, expand production, but it's not. Investing in the stock market is speculative. Those dollars don't reach those companies. They pass from one speculator to another. And the stock market has been speculative for many, many decades. And I'm certainly not the first one to remark on that. But we don't understand that. Our language misleads us to thinking that we're actually investing, we're doing something productive. The economists that we talked to, our three international economists, they said economists have long discussed the difference between productive and speculative investments. But this has not entered the dialogue of investing. The framework of investing doesn't recognize it. It's a radical frame that we need to recognize. And it's very much like renewable and non-renewable resources, right? And that was Schumacher who introduced that. And that changes everything. Some resources can be renewed, some can't. So some investing is productive and some is not. Some is just purely speculative. For example, so what does productive investment mean? Well, I've been working on this myself. My wife and I have been trying to pursue more and more what's called impact investments. And for example, every community has a CDFI. This is a terrible term, but it's a community development financial institution. Pretty much every community has at least one of these. In the Boston area where I live, there's Blue Hub. And Blue Hub has $1 billion in assets under management. It's surprisingly large, very effective. They, for example, did something called the SUN Initiative, Saving Urban Neighborhoods, I think is what SUN stood for. And they took investments from, real investors, and they used that to go out and buy homes that were on the verge of being foreclosed. And these are families that were in trouble. They'd already entered foreclosure. SUN bought those homes, turned around, negotiated with the bank, and brought down the amount owed, the principal owed, by about a third, and then put the same mortgage back on the same house with the same family in more favorable terms. I mean, they had to share appreciation, when the home was sold, which some people didn't like. But it was a remarkable way to save family homes. And it's been so successful, it's rolled out to 11 states. And capital, impact capital enabled that. That's productive investment. We could have handled the entire 2008 meltdown in that way, kept families in their homes. But we don't. We allow, Goldman Sachs to siphon off all this money. There are more and more productive investments. They tend to be called impact investments or local investments. And they're harder to do. We have dirt roads to impact investments. We have super highways to Wall Street investments. So guess what? Wall Street's extracting a lot. But we need to build this. And I think this is, I'm hoping that the young people watching this, we need you to help build these roads to productive investments. It's critical. We need more infrastructure.
Yeah, that's a really that's a good analogy to that. What kind of return on investments do these CDFIs earn?
Well, it's a good question, and it's a perpetual question. I've I've seen the question. I've tracked socially responsible investment, or what's now called ESG, environmental
Yeah.
social governance, for decades as a journalist. And the perpetual question always asked is, do I sacrifice returns? And people have been trying to prove this for decades. And I'll talk about returns in a moment because it's important. But I think it's the wrong question to start with.
Mhm.
2/3 of impact investors, and these are the most radical investors out there, 2/3 of them say they want market rate returns. And
Mhm.
I've been writing about this. I published a piece in Impact Alpha, which is the premier publication among impact investors. And I said, when we say that, when we want market rate returns, what we're saying is you must maintain the status quo. Even if the status quo is the nature of the problem. If too much extraction by finance is the problem, then if you maintain the status quo, then you really haven't changed
Yeah.
much. All right, that's my sort of scolding
Yeah.
premise. But then I'll say, okay, here we are, we're real people, we want to retire. We want decent returns. You can get them. I don't think you can get maximum returns, but also maximum returns tend to be more risky.
Right.
For example, Calvert right now has an impact note. It's paying 5.1%. I just nabbed a bunch of that myself. 5%.
Yeah.
That's great. So, but some of them, Blue Hub, you're going to get more, something like 2 or 3%. So
Right.
and I think the question is, what are we trying to do with our investments? What are we trying to do in the real world?
Yeah.
And can we have healthy returns and safe returns? And I think yes, we can.
Right. Yeah, that's kind of the gist of the question is, I think if we're expecting 10%, more than 10%, we're committing ourselves to activities that are going to hurt people on the planet. So
Wow.
I think it's more of a question of what kind of return can we expect and still do the right thing.
That's a great way to say it, Vincent.
So let's you mentioned the CDFIs. I was intrigued by something that I've been asking about for a long time, but was not really familiar with, and learned more from your book about community-controlled land and housing. And the idea of community ownership of the land, in which people essentially leasing the improvements. And can you just talk a little bit about how that works and where it's being tried?
Sure. Yeah. At the Democracy Collaborative, we have this phrase that we call a great ownership transition. And this is one of the large processes that we need to get from an extractive economy to a democratic economy. You can't have the 1% owning everything, right? And so what does it mean if you have broad-based ownership? Well, community ownership of land and housing is a great model, and a proven one, because all the models I talk about in the book, we have proof of concept. They work, and they deliver superior outcomes if your definition of success is something besides maximum short-term extraction. Like, for example, I'll name two. One is the Community Land Trust, and there's a movement for these around the country. And these are where the community will own the land as a nonprofit, sometimes as the city, and people own the houses on top of the land with a 99-year lease.
Right.
There's a great one here in Boston called, Dudley Street neighborhood. And what this does is it reduces the price of the house and it stabilizes it. In the 2008 downturn, community land trust homes had foreclosure rates of under 1%, whereas it was over 5% for traditional homes, dramatically less foreclosure. And you can sell the homes, you still have private ownership, but you reduce the price and you keep it more stable, so you don't have this huge, houses are no longer pieces of speculation.
Right.
And here's another example, and this one I love. It's the Kensington Corridor Trust in Philadelphia. It's an example of a commercial corridor trust, which is a relatively new model where community will come in and buy up a corridor of a commercial district ahead of speculators. and say, we're going to control this. The community is going to control who gets to locate there. We want locally owned businesses. We want BIPOC owned businesses. We don't want, big chains extracting value out of our community. So it's a very exciting model. And these are examples of community control of land.
Right. And I mean, I think we have a really strong tradition in the U.S. since the New Deal of municipal or cooperative ownership of control of electricity and water. But also forests. I was wondering if you could talk about an example of that.
Sure. Well, the first point, Nebraska, the entire state of Nebraska is a cooperative and community control of electricity. So it works on this massive scale. Forests is a fascinating example, Vincent. And that is 15% of forests worldwide are already owned or controlled by communities or indigenous peoples. And the UN has written about this and has said that this model is vital to preserving endangered species. Because when you have, for example, indigenous control, they want to keep that forest standing. They want it's the value of the water and the soil and the living creatures are part of their natural concern, not just cutting the wood and hauling it out. So I was astonished and heartened to see that number.
Yeah, all right. And I think another prime example of more common ownership that you discuss in the book is the B Corp movement and also the cooperative ownership movement. I was wondering if you might share a few success stories about cooperatively owned businesses.
Sure.
And mostly on the employee-owned side rather than the consumer-owned side.
Yeah, that's great. Well, one of my favorites is in the Bronx, and it's called Cooperative Home Care Associates. And this is a large worker-owned co-op, and it's in the home healthcare business. Most of the people who work there are women of color, and they're out in people's homes helping disadvantaged families, manage various aspects of the household. And this is a worker-owned firm. It's also a unionized firm. They really value their union. I think it's SEIU is their union, and it employs about 2,000 workers.
Wow.
So it's the largest by head count, the largest co-op in the U.S. worker co-op. Another, I had the good fortune. Democracy Collaborative occasionally takes people on tours of Mondragon co-ops in Spain. And this is a large, very large, long-standing whole network of co-ops. I think there's something like 2,000 co-ops that are part of this, and it's been around for probably about a century now. And it's become the norm in the Basque region of Spain. If you're starting a business, a lot of people go, oh, let's start a co-op. Because it's become the norm. And there's a TV station, there's a white good company where they're making washing machines. I mean, these are very substantial companies and very successful. And for example, when one of these they had one company that went bankrupt a number of years back, and the network worked to get the workers from that one firm to get jobs at the other firms. And so their workers are the center of their concern. And of course, they're profitable businesses, but extracting profit is not their central concern. And there's a cooperative bank, Caja Laboral. I think I'm not sure I'm saying that right, but this was the driving force at the founding of the Mondragon co-ops. And when a worker-owned business had a loan and it got in trouble, the bank would lower the interest rate to help them through. And it's an example. I mean, it kind of blows our mind, right? Because we think, oh, if you're in trouble, raise the interest rate, put penalty fees on. No, they do the opposite. They want to keep jobs. They want to help workers thrive. And that's
Right.
that's the aim.
All right. I think the significance of all these examples, I mean, a lot of people, when I talk to folks about the current economic system and talk about alternatives, they say, well, how are you going to scale that? And I think to some extent that's the wrong question for a couple of reasons. One is, first is I think what we need is a much richer imagination of what's possible in a way that makes a living and provides a livelihood to communities. And the second is I think that we've had scale. We have Bill Gates going from 10 billion to 130 billion. We have a global economy. We have extraordinary networking capabilities. We can do this webinar in a way now that we couldn't have done 20 years ago. But what we're lacking is a sense of place for individual places. We're lacking local economies. We're lacking a commons, more space for the commons that has nothing to do with commerce and nothing to do with government, but everything to do with people gathering to be creative and do things that human beings do best. What we need, I think, at this point are a lot of replicable models and things on a smaller scale that can play out and that we can test. And going back to the Oliver Wendell Holmes example with grow them when they work, and we want to see more of them. There's one last question I want to ask before we go back to we open it up to questions from the people who've joined us. But I was intrigued. You talked about Herman Daly, a lesson you learned from him when he described that the finance lacked a plimsoll line. If I'm pronouncing that correctly, I'm wondering if you could just share a little bit about
Sure. Before I do that, and that's a lovely story. Thank you for that prompt. But let me just go back for a moment to this question of scale. I don't think that we get from here to a democratic economy by scaling up worker co-ops. I mean, I don't think that's really the trajectory. Yes, you need to do that. But also publicly traded companies, we need a new paradigm there. You need a next generation of enterprise. I mean, this idea that publicly traded company exists to maximize returns for shareholders, that's archaic, and we're not going to survive if we keep that. ExxonMobil in 2022 saw its share price go up 80%. And yet we know forests are on fire, cities are going underwater. And in fact, some friends of mine at a socially responsible investing firm filed a resolution with Exxon, a shareholder resolution, saying you need a plan to begin to wind down fossil fuel extraction. And Exxon was so enraged it sued them. It didn't just go to SEC and say withdraw the resolution. It actually sued them, which it may well put that little firm out of business. So and yet Exxon is doing exactly what all publicly traded companies are doing, which is trying to maximize returns for shareholders. So that premise is archaic and needs to evolve. So that's one thing. So let's go back to your question about the plimsoll line. As I'm still an associate fellow at the TELUS Institute, and I had the extraordinary good luck a couple of years ago. There was about a dozen of us gathered by Zoom with Herman Daly, who's of course the economist, talking about we need a low growth or a no growth economy. Brilliant. I was so touched and fortunate to spend some time with him by Zoom, and it turned out to be less than a year before his death. But one of the things Herman, and it was interesting because one of the things that Herman talked about was how, even though I think those of us who are environmentalists know his work and really appreciate his work, other economists shunned him, he said, throughout his career. And it was amazing for me to hear that, this brilliant genius forging new ground was basically shut out of traditional economic thinking, which tells you how profound the paradigm shift is that we need. And one of the things that he said is that he said we don't have a plimsoll line when it comes to consumption. And a plimsoll line is the line on a boat. There's literally a line on a boat that says don't load it above, too much. If the water hits the plimsoll line, and if you keep loading it, you're going to overload that boat, and it's at risk of sinking. So it's how much can you load on a vessel before it sinks. And he was talking about consumption. How much consumption can we load onto the planet before we really sink natural forces? And I found myself thinking, we also lack a plimsoll line for finance. This notion that no amount of wealth is ever enough. I mean, when I was a kid in the 1950s, financial assets, and this is stocks, bonds, debts of all kinds, were roughly equal to gross domestic product, right? Which is the real economy of jobs and spending and income and flows. So you got the real economy, and then you've got the financial economy basically sitting on top of it. And they were roughly equal, right? Today, financial assets are 5 times GDP. And that's a figure from the Federal Reserve. So it's a reliable figure. 5 times GDP. And yet they're built to grow an infinite amount, a maximum amount, a limitless amount, and they grow by extraction. So that is not a sustainable model. And yet we lack a plimsoll line. How many financial claims can you load onto a society before you destabilize that entire society? I think that's the point that we're coming dangerously close to, Vincent. I mean, because you have billionaires who are funding the hard right, which is trying to capture democracy right now and destroy democracy. And of course, we can't tackle climate change, and workers, 40% of jobs right now are precarious, part-time, Uberized, subcontract work. I mean, we're at a dangerous point, I think, of destabilization, and yet we're not talking about the real problem yet.
Yeah, thank you. Yeah, and I think the point about overloading the existing structure also speaks to this issue of the dominance of these publicly traded corporations in the economy. I think before we were talking that something like 1% of the corporations provide a third of the jobs, but 2/3 of the jobs come from, for the most part, from family-owned businesses or from small businesses, and not not from the 3,800 or so publicly traded companies on the New York Stock Exchange or the NASDAQ. So I think one of the things your book has done is to open up the sense of possibility of other kinds of institutions that we really need to have take some precedence over the emphasis we've had on these major corporations. And it's even illustrated further by the fact that all the gains in the stock market now are coming from 5 tech companies,
right?
Based on speculation about AI. So
it doesn't look very sustainable to me.
Yeah. Yeah. So, with that cheerful note, I'd like to open it up to questions. I think Heather has been examining the questions coming in. So
yes, first of all, thank you for this beautiful and super important conversation. That's been really, really riveting and sobering. So just reminding folks, you can put your questions in the Q&A functionality. Hello, hello, to those that I know, so many names I know. So welcome and glad to have you here. So Tessa asks, what do you think of having a maximum wage?
It's not something that I've thought very much about. I presume you're thinking about CEO pay, for example, but if you look at CEO pay, I believe more than 95, about 95% of it is from stock options. And so it isn't really salary that is that's going out to top executives. It's gains in the stock market. I don't know what I think about a maximum wage. I think what I'm concerned about is do we really think that executives are worth so much more than workers? And isn't that a form of bias? And doesn't everyone have a right to live and have enough to live? So I think I'm more concerned about living wages myself. And of course, stock options are another issue that certainly needs to be revisited.
Great. Another question coming in from Esther Robertson. She said, you've talked about male supremacy and you've mentioned that the top 10 richest people are men. Her sense is that the economists most focusing on new approaches are female. And is there a gender issue here?
That's a great question. I think there is. And I think what I would say is we need more of a female sensibility, and which of course is possible for all of us. It's not limited to females, but it is true that socially responsible investing, women are instinctively drawn to that. There are more women pursuing socially responsible investing, and many are, for example, are wives of wealthy husbands who have been who predeceased them. And also young people. So I think the next generation gets this, and women get it faster than those who are, I think, the norm in the system. I saw a statistic that about 98% of financial assets under management are with investing firms that are owned by white men. So, and investing firms are the ones who are really holding and controlling the assets today. So, and I do believe that extractive capitalism is really the apex of the patriarchy. It's this notion that, we own the earth and it's ours to do with what we want, and that some people matter and some people don't. That's a patriarchal society. And, I think it's under stress and under crisis. And I think that's the reason the crisis, that so much chaos we're seeing today, because there's this clinging to, let's keep it going as long as we can. And I think those of us who are here today are recognizing, well, no, we need to move forward into what comes next. And it won't be so scary as it seems. In fact, it'll be much better.
If I can add here, just in a related note, Mariana Mazzucato, who unlike Herman Daly is considered in the economic mainstream, looking at economic history, talked about there was the shift a couple of hundred years ago, that when you talked about value, in that the creation of value, the social value of a product was part of the equation. And it's only in the last 100 years or so that economists adopted the model where price is the sole determinant of value. That we've kind of squeezed values, that what we think of as moral values or political civic values, liberty, justice, equality, out of the economy. And Milton Friedman kind of killed the cow in 1972 when he adopted shareholder primacy as the singular value of a corporation. So that's something that, even within the patriarchy of the past 500 or 600 years, that's something that got bled out, that the idea of values that are not related to a number, that is an extraordinary devolution, I think. of.
It is,
yeah.
and I think it's really, I love that price has become the defining number, and also, of course, share price. But yeah, I think, I think of myself as a business person, and as I said, I
Yeah.
come from a business family. So I mean, I think what's happened is business has been captured by financial extraction, and that isn't. People don't start companies. People do start companies because they want to contribute something good to the world. And then venture capitalists come along and take control, and extracting as much as you can is what happens. And in fact, I saw this over 20 years at Business Ethics. I mean, I remember the Hewlett family being enraged at what they saw happen to Hewlett Packard, because that was a very responsible company, and it got pulled off course, and I saw it again and again and again. It happened to Ben and Jerry's. And so when companies get acquired by big capital, or they go public, it's basically an algorithm that becomes in control, and not human beings. But it was the founder of Merck, the big pharmaceutical company. He said, medicine is for the people, it's not for profit. So I think what we're talking about is getting back to what business is really about.
Yeah, I think when we change this, this system will morph on its own. Commerce will continue for a long time, and making things and selling them is a part of human culture. And I can also back up your statement about how people start businesses from being in the outdoor industry, from the way Patagonia got its start and has continued to operate. But let's go back, Heather. You've got
Yeah,
some,
sure.
Yeah.
Great conversation though. Abby Martin, who you might know, Vincent, says, thank you for the great conversation. Where does philanthropy, whether from individuals, corporations, or foundations, fit into this new framework? And then follows up with, how do you anticipate the nonprofit sector might realign around a different model of wealth?
These are good questions. Yeah, I think philanthropy, I would start by saying what we're talking about here is system change, right? Not making capitalism a little bit less bad, but we need another system where life is at the center and not capital. And I think the role of philanthropy is to help to build the next economy, what we call the democratic economy at Democracy Collaborative. I mean, for example, supporting employee ownership, supporting, I talked about the Kensington Corridor Trust. I think those were, the land was, that commercial corridor was acquired with philanthropic money. Some of it low interest loans, some of it might have been donations. So I think, and those people who have substantial wealth are also in a position, in addition to, I think, foundations, persons of wealth are, I think, can be leaders, and I hope will be leaders in building the democratic economy. And we can do it with our philanthropic dollars, but also with investing dollars. Now, of course, you need to keep the people who are down and out and disadvantaged still need support, but I'm not saying abandon that kind of philanthropy, but put more toward building the next system. And there are some remarkable people doing this. Peter and Jennifer Buffett are doing some remarkable local philanthropy, building community wealth in their community, for example.
And our last question that we have in the Q&A, oh, another one just popped in, so never mind. This one's interesting. Do the stock markets serve any constructive purpose? And if not, should we abolish them?
I love this kind of thinking. I think people are stirred up now. These are good questions. Bring it up in class. Talk about that. Yeah, it serves a function. It serves a function, and the function is liquidity. If you make an investment, you want to be able to get out. For example, right now I'm invested in my home, but the only way to get my money out basically is to sell the home and move. And so that's there's very little liquidity in that kind of asset. Whereas, stock in IBM, you can sell that tomorrow. So liquidity is valuable But, should it be the center of the world? Probably not. I think the stock market can still be there, but what we need is more uh, local investing, impact investing. We need infrastructure for that. And there's a lot being done, and we need a lot more of it.
Maybe we should return the location of the stock market to outside underneath the chestnut tree with everybody.
That's a great, and we have to show up in person and trade our
exactly. Yeah.
Maybe that'll slow things down a little bit.
Wow, what would that look like? Another question comes in from Melissa Mazio. Great to see you here, Melissa. In your view, what does this new framework look like practically? And how radically different is it from the society we have today? And how long would this take to achieve?
Yeah, I don't know how long it will take. I think we're talking a substantial evolution of our economy. And, how long will it take to reduce carbon emissions, the amount that we need? I think a lot of us thought it'd be done by now. I think it's hard to say, but, how different is a society that has like no carbon emissions or even negative carbon emissions? Well, it's pretty different. Solar and wind and so forth. In a lot of ways, it's the same too, right? We probably need to drive less than we do. I don't think we've embraced all the changes. I think we need to stop flying so much. I don't think we've embraced all the changes that are needed for a carbon neutral economy. So what is the trajectory for a democratic economy? I think at the start, it can feel kind of scary. Remember, we used to think we were going to freeze in the dark if we limited carbon emissions. We don't think that anymore. Is this going to be a collapse of the stock market? I don't know. Maybe not. It seems to collapse all on its own. But I think it means we'll have more thriving businesses. We'll have more people with a share of business ownership, workers, families. I think we'll have more people able to make a living and not be struggling and not be so indebted. We'll have nations around the world, developing nations, less burdened by debt. We'll have fewer billionaires or maybe none. So how different is that world? I think it's the world that we want to live in, and that a democratic society is ideal for. How long will it take to get there? I don't know. Let's get to work.
It's a tough one. And I know we have 2 minutes left, and I'd love to squeeze this one in. It's from Ben Saltop. Hi, Ben. He used to be an employee here at CBay. Thanks for this amazing conversation. Since it's an election year in the US, he'd love to hear more about what it might take politically to dismantle wealth supremacy. And does it need to come from the top down, like from the government, or can it be more bottom up?
Well, I think it starts with changing our mind. I mean, how do you dismantle white supremacy? How do you dismantle male supremacy? I mean, I think it starts by recognizing the bias that is all around us, and saying things can be different. That no, it's not true that some people matter and others don't. So it starts with a shift of mind. I don't think it starts with policy, right? It has to live there and be carried out there. But recognizing bias and eliminating it in our own minds, I think where this starts. There's a lot that can happen in policy. I mean, I just read just the other day that the state of Connecticut is forgiving millions of dollars in debt of students. I think of tens of thousands of students. The idea that not all debt needs to be paid. Some debt can be forgiven. That's critical to having a democratic economy and having a next system of capital. And that idea is starting to catch on. So, and Biden has made community wealth building part of his local economic development frame, and that's about local economic development where communities own and control their own assets. Employee ownership is catching on in policy. There's ideas for SBA type loan guarantees that would enable more firms to be sold to workers. So there's a lot that can be done in policy, but I think we really need to have an understanding in our mind of what a democratic economy is and what an extractive economy is, and the bias that keeps things in place. I think that's where we start, and I think is where we start with conversations like today. So thanks.
Right. Well, thank you so much, Marjorie, for joining us for the conversation, for your work and for the book. And thank you, Heather and Stu, as always, for sponsoring this conversation.
Always a pleasure. This was fabulous. It's been recorded and it will be posted to our YouTube channel in the next few days. Thank you, Marjorie, and thanks to all for attending.
Thanks so much. This was great fun.
Bye.